It's interesting because in your business, I suppose, more than most others, you'd be getting a pretty good idea as to how the sentiment is going to be affected beyond when we see the end of this virus, right?
Sure. Although I'm actually rather optimistic about it. I mean, we see, we see what is happening in the pipeline. I mean, the virus has, as you would expect, had a significant negative effect on the M&A activity, in particular in mainland China over the first 2 months of this year. But there are processes continuing, and people can look beyond the virus, I think, and so there's, we hope at least that things will improve. We hope that it will improve relatively quickly, and we do expect, in fact, to see a little bit of a bounce at the back end of that. So overall, I'm as optimistic as I guess you can be in the circumstances.
Which areas would you, I guess, isolate as being particularly vulnerable, and where would you see resilience?
Well, the whole sort of M&A scene in China has gone through a little bit of a tough time. We just surveyed the M&A activity from 2019 versus earlier periods, and actually saw a significant decline in China M&A across 2019. It was down 15%. That was the lowest in 5 years, the lowest level since 2014. And if you look within that, if you look at the sort of categories within M&A in China, a significant decline in domestic M&A, China companies buying other China companies within the country. That was off by about 15%, and that is the biggest category of M&A. Outbound M&A down by 40% off an already low total, so it's bouncing along the bottom. But then there were some sectors that actually held up rather well. Private equity held up at levels pretty close to 2018, not so far away from their all-time peak in 2016. And foreign inbound investment coming into China actually was higher than it had been for several years, although that's a smaller category overall. So the picture was a bit mixed, and you had a lot of uncertainty through the 2019, really around the trade relationship with the US. You had financing difficulties with China's deleveraging process, which was affecting M&A. And then, of course, that all sort of so that has an effect of sort of pause buttons being pressed. So people kind of just stop those processes. They wait to see how the uncertainty plays out. And then we kind of came into the coronavirus, which is more pause buttons being pushed. And it really is very broad. It is across all of the industry sectors. I think, with perhaps some exceptions, medical care, online shopping, the internet sector generally are probably a little bit more resilient. But apart from that, quite a broad impact. And people just press, the M&A does not like uncertainty. So people press that pause button, and that's what we're seeing right now.
David, though, in terms of liquidity, given that we've seen the PBOC and top leadership really saying whatever it takes for growth targets to be hit, for social targets to be reached this year beyond the coronavirus, would you expect that if deleveraging takes a backseat, we know that the lack of financing really stifled deal making during the previous period, is there likely to be a pretty strong rebound because of easier and more plentiful access to financing for companies?
I actually think there'll be a strong rebound for a number of reasons, actually, of which that is one. The other, I think, the big uncertainty in 2019 was the trade relationship with the US. And the phase one deal is positive, but it hasn't resolved that situation. But I think what has happened now is that people are becoming reconciled to almost the new normal in terms of how that relationship will work. And they're not expecting to see big changes. So some of the uncertainty there, I think, has been removed. You've got stimulus measures, as you've just described. That's a positive. You have a private equity industry that is very well capitalized and is under pressure to deploy money. It is also highly invested and is under pressure to sell assets that it already has, which again drives M&A activity. I think we will see activity around distress and restructuring, although I think that will be less than many people imagine to be the case. And then there is the backlog effect, because we've had all of 2019 with the trade uncertainties. Now we hit the coronavirus. So these pause buttons that I keep referring to, all being released at the same time, I think we will see quite a strong surge in M&A activity as things start to clear up around the coronavirus. So a slow start to the year, but actually I think a very strong rebound, and we might find a very hot market in the second half.
Are we likely to see consolidation among certain industries as a result of the difficulty of doing business during this time?
Well, I think that is a general thing in China. I mean, the Chinese industry in general is somewhat fragmented. There is a lot of space already for consolidation to happen, for M&A to happen. There are a lot of sort of normal reasons for there to be a high level of M&A activity in the Chinese economy, both domestically and outbound private equity. So those fundamental drivers of M&A continue to be there. And essentially what you've seen is they've been disrupted by these significant uncertainties in the market. First of all, trade negotiations, secondly, the coronavirus. And as those things are starting to clear, or at least people are coming to terms with the new normal, those fundamental underlying drivers will push activities. So despite the doom and gloom that obviously we're feeling at the moment, I do feel optimistic about the future.
Does the prospect for the tech sector, which in some ways has been fairly sheltered with the coronavirus concerns in the markets, but do those prospects improve materially now that the phase one trade deal is out of the way? There's a little bit more goodwill between the US and China, or does the tech issue, the security issue, the IP issue still remain pretty thorny?
I think it still remains pretty thorny. I actually think that if we start to think about cross-border M&A, my view is that large-size cross-border M&A in industries that are regarded as strategic, and the tech sector is certainly one of those, will face difficulties for the foreseeable future. And that is not just a China-US thing. It's not just a China thing. I think that is a cross-border thing. So that is something I think if you look back into 2019. And again, this is not just China. If you look at the big deals that happened that year globally, they tended to be domestic. Companies in a single country acquiring a country. We're not seeing those big size cross-border transactions, and that's certainly what we saw in China last year. The outbound really bouncing around at a very low level, and a very small number of deals under over $1 billion.